What's up, good people? How you doing? Welcome to Stock Up with Larry Jones. Hey, if you're new to the page, just go ahead and hit the like, subscribe, and notification bell right now. We're going to do this live FOMC meeting. We're going to look at what the Fed is going to do as it pertains to a rate hike. I got them locked and loaded right here. And we're going to see this together live. All right, good people? All right, so we need to see what they're going to do. We'll know in fact before. So keep a look. For those of you that are new, keep a look on this number right here, that Dow. Okay? The dollar index, as you can see, is a little red, but keep an eye on that. You guys know how this goes. It starts green and then it ends up red. So let me do a full screen so you guys could see it. There we go. All right. And we'll go from there. All right. So, hey, good morning. Good morning. Good morning. Good morning. Good morning. Good morning. Yeah, 75. 75 is 80% priced in. And but we need to see what's going to happen after that. All right, let's just listen right now.
Some indication that, there'll be fewer hikes or there may be some more hikes rather than just ongoing monetary tightening. That's really the question. It's all about the messaging, as Jim said.
Mona, what would those signals sound like to you? That perhaps the tightening phase, they're going to be a little easier on it.
Yeah, I think Jerome Powell will be.
So we just have to listen to his tone, okay? It's 80% priced in at 75 now and then 50 next month. That's already priced in about 80%. There's an extra 20-ish% that say that he may be a little more dovish. I don't think he's going to be dovish. So remember, the CPI numbers he's going to let us know what he's going to do with the interest rate hike first, right? And then I believe 30 minutes later, then he's going to start talking. The reason why I use the thumbnail that I did is because the more the Fed talks, the more our money walks. So he's got to kind of take a hawkish tone because of data that's been coming out. And now we have to see what he's going to say beyond this year. If he does, here we go.
Now with the Fed decision.
Tyler, a 75 basis point increase by the Federal Reserve, bringing the target range for the Fed's benchmark interest rate to 3.75% to 4%. The decision for a fourth consecutive 75 basis point increase was unanimous, but the statement does add a new flexibility on the pace of future rate increases. The Fed now says that it must pursue monetary policy that is, in its words, sufficiently restrictive to return inflation to its 2% target over time. The Fed now says that in determining the future path for interest rates, it will consider what it calls the cumulative tightening of monetary policy and also the lags between its monetary policy actions and their impact on inflation and overall economic activity, acknowledging that there is a lag between the actions that it's taken to date and the impact that they've had on the economy so far, raising new questions about at what point the Fed could perhaps evaluate the impact of those actions and at what point they'll be fully baked in. Back to you.
All right, Kayla, thanks very much. We appreciate that.
Yeah, let's bring in our panel as we do see stock averages pair the losses. The S&P has turned positive. It's up 15 points right now, 38.72. The Dow has just jumped 200.
Sorry, good people. I'm talking. All right. So the Dow is now up. It jumped 200 points. 200 points. All right. Let's just listen.
The first one here, in determining the pace of future increases in the target range, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity, inflation, and economic developments. So the first part, the part I didn't read, is they want to make sure it's sufficiently restrictive to return policy. So that tells you maybe they have more work to do. But the idea that maybe they're taking into account lags tells you maybe they're going to go slower here. I don't think I would mistake this for saying the Fed is ready to pause. I think it's something that you might digest and say the Fed is aware that it's done an awful lot and doesn't feel it has to do quite as much as it had done in the past. I'm going to take a quick look while I'm talking here at what's happened to Fed fund futures, and they've come down a little bit. We'll see if that holds, but that May contract was trading at 503 for a peak funds rate. Now it's at 496.
300 points. The Dow jumped 300 points based on the news that the market was already expecting, right? So that was already priced in. Now, as you could see, 300 point jump on the Dow. Now, what happens next is Jerome Powell, the Fed, has to answer these questions, and he's going to talk. The danger in that is the longer he talks, the more the market could tank. So let's hope that he doesn't do a ton of overly hawkish talk, meaning he like got his big brother with him and he like, yeah, we gonna get y'all, we gonna do this. Look at the Dow, good people. Look at that. I mean, that's a jump. Right. Now, if he says, so we have this rate hike, and then we have another rate, one more this year, and then the next FOMC meeting is in February. All right, I don't believe there's a January FOMC meeting. Now, if he says just 30 minutes from now, when he's going to start talking, I believe it's 30 minutes from now, if he says we're going to go up another 75 basis points in February, the market is going to sell off, right? So he needs to be 50 to 25 in February for this market to stay green. If he gets more hawkish, that's not going to be good for us, right? And so it's like, I don't even know, it's such a balancing act. I don't know how he could just land the ship safely. Now, Janet Yellen also said that she believed that we could totally avert a recession. We could literally go and not have a recession. She believes that. She has way more data than I do, though I don't agree with her, but I hope she proves me wrong. All right. I hope she proves me wrong, but there's a slim chance of that happening right now, good people. So that's what I wanted to do. I wanted to bring this for you guys live, and let's see what's going on. Peace and love, family. Shalom, shalom, my brother. Yes, sir. Thank you. And so this is what I want you guys to know. Let's listen to what Rick Santoli has to say.
Small bone. Granted, it's maybe the size of a wishbone, but I'm wrong. I didn't think they'd throw any bone. The wording as it was put forth and what I heard from Kayla and Steve, to me, sounds like they gave it a little wiggle room, which explains stocks, and the markets smelled it right. I'm always a big believer in market whispering, and if you look at a 2-year yield, it started to creep down. If you looked at the euro and the dollar index, the euro, well, it started to creep up, the dollar index started to creep down. Those are both very telltale signs that we're going to be a little less hawkish than maybe many anticipated. And I think when it comes to what the Fed's going to do, I think that anybody who discusses data dependent, I just don't agree with. I think the Fed, and just based on how their statement reads, they are looking at a spot down the road and they change what that area may be. But truly data dependent just doesn't seem to add up at this time. And one further point I'd like to make is that if you continue to monitor how much movement we get, that is tossing some of the numbers into the next Fed meeting, whether it's Fed fund futures, which the moves are small, or the moves in the current Treasury complex where yields are moving down, it's certainly a different response to this meeting than the last several 3/4 point increases.
Mona, I want to bring you back in this conversation, get your reaction to this, not only this.
Sorry, people, trying to mute and all of this and unmute. But hey, listen, so far it's good, good people. It's good. I'll take it. And, he did leave a little wiggle room. I believe that he's going to be talking 2:30 Eastern time. So just check it. 2:30 Eastern time, I believe Fed Jerome Powell will be actually talking at the FOMC meeting live. Okay, so I'm just going to cut this one off right here, and yeah, I'll have two lives back to back, but I'm just going to cut this one off right here. I may come on live, or I believe I'm just going to get data together and then play the actual result later tonight. That'll just be better. You guys already see 75 basis points. The market knew it was coming. The market reacted in a positive way. I had my little TQQQ play, and I didn't go in heavy, so I'm good there. I'm going to pop it before I'm going to sell it. I had a call. I did a call option on TQQQ because I kind of expected this to happen. I'm going to sell it now before the Fed start moving his mouth and take my money back. All right. Hey, we see you guys in the comments section. Make sure you check out my two links below, right? Weeble, Moo. Love you guys. We'll see you later today. Live, love, laugh, and learn.